All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live streams. Anytime I share the links on X, they get hidden due to the fact that we are no longer allowed to post external links on X that get broadcasted out to everybody. So even if you have your notifications on X, you might not get it. So follow, turn the notifications on. That way you don't miss any of the free content I'm putting out here in the future. All right. Welcome back, everybody, to another and the final weekly prep for public streaming purposes of 2024. In this stream, I have a lot I want to cover, but mostly want to focus on something that had come up this past week that I want to put to bed and prove that analyzing past data does not reflect future price movements. So it doesn't matter. That was the comment that I received. And I don't want to drag too much, but I will prove to you that analyzing past data does reflect future movements in price. So it most definitely does matter. Now, this is a little bit of a long-winded response, but by the end of this stream, I want to make it known and prove to you all that the market is the Mando model, and there is absolutely nothing like what you're about to see. That is the focal point. That is the goal. And I am fairly certain that I will get there by the end of tonight. So if you're watching this on X, please drop a like on the stream. If you're watching this on Rumble, drop a like. Let me know what you think in the comments, because this is going to be the most in-depth breakdown that I can possibly give you, in addition to taking a whole lot of victory laps from all the work that I had put in this past year. So before anything else, like I said, why was that tweet wasn't just randomly thrown at me, right? So to start off, I just want to discuss, where it came about, right? So I had saw a tweet that said JPM has said that the markets are pricing in a Donald Trump election win. So naturally, I saw that and had something to say, of course. My comment was, I cannot believe people still think pricing in is a thing, right? Now, obviously someone got a little upset with what I had to say. And ultimately, it came down to me not only posting, a previous tweet on how I just kind of discussed how literally every quote unquote crash or every, bear market, all it has been is simply a retracement into a discount imbalance for a new run on liquidity, which I'm going to get to that. But, following this tweet, I said, look, if this tweet isn't enough for you, I'm going to go in depth and we're going to review everything that I've posted this year, right? We'll go through it fast so you're not here all night. But if you're here on a Saturday night, you probably don't have anywhere to be anyways, right? Haha. So first off, for anybody here who's new, I just want to give a very, very brief overview of my model, how it works, what are some of the key things to look at in terms of how we can even identify these price movements, and how we can use past price movements to help us make decisions for the future. Okay, so let's do it. Pulling it up right now. Okay. So first and foremost, I'm going to show you this example, and then I'm going to show you about 5 others historically on how we can come to the conclusion that these past price movements can indicate where price is moving in the future, and that pricing in, or that idea of something being priced in or baked in, that was another one I heard, is just false. And this is something that can be completely broken down and explained through really basic price reading principles. Okay. So the first thing when identifying my model, and the first, real step, is to determine what is your draw on liquidity. Okay. And when you think about that, you might say, I've never heard of that term before. What does that mean? Essentially, what we're talking about in terms of liquidity is where price is likely to draw towards. Okay. Why is likely to price to draw towards there? Because that's where the money's sitting. Okay. Where's the money sitting on this chart? Okay. And simply put, what had to have happened at a swing low? The only possible explanation for this would be that it was bought and price is moving higher as a result of that, right? So those orders resting right in the vicinity of the low that was made, that would be our liquidity, okay? And it plays on the same exact side here to the upside, okay? What had to have happened at this point where my cursor is? Well, there's no other explanation than for somebody to be selling this thing, right? Enough to push this price down the way that it did, huh? So we know that there's orders resting up here. There has to be. It's the only thing that makes sense, okay? Now, from this point, after we determine what our draw on liquidity is, how do we do that? Well, we can determine the draw on liquidity or where price is likely to go based on our current market structure, or as many people on X say, trend. Okay. How do we even identify a trend? Look to your left. Using past data to help you to reflect and make decisions on future price movements. Okay. Look to your left. In each of these situations here, what did we do? We took out a high to shift market structure or the trend bullish following this move down. Is that agreeable? Okay. So by taking out this high, is it fair to say that we are now in a bullish trend marching towards new all-time highs? I think everyone would come to the agreement that that is true. Following this, we have our range being set. Okay. So we have a bullish trend. Beautiful. Okay. We can draw our little fib, and I do not trade using Fibonacci. All I'm using this is for measurements, and most specifically, the most important one, and really the only one of these Fibonacci levels that I'm looking at is 50%. Okay. In a bullish trend, over 50% is premium. That means you are overpaying in terms of the overall structure of your current range. Okay. At 50%, we can look at that as equilibrium or fair value for that specific name that you're looking at. And in this case, we're using NASDAQ. And anything below 50%, we would view that as a discount. Why? You are getting it below fair value or equilibrium. And in that case, that would be deemed as discounted of what the fair value price of a specific range would be, right? At 50%. Okay. So from this point, the next step in the equation is, okay, this is great. I have an idea. We're in a bullish trend. I'm looking to take out these highs in the process. How can I do this? How can I take action upon this, right? Okay, here's where the next step comes in. When you look to your left and use past data to reflect future price movements, we can look for imbalances in price to help us and give us structure behind our idea for price to ultimately go home to liquidity and go get some more. Because without liquidity, I tend to use this example, but that liquidity is the gasoline for the vehicle. Without gasoline, without money, this does not move. Okay. And if you want to disagree with that, go look at a penny stocks chart. Why do you think it stays in the same vicinity for so long? Because the ample and necessary amount of liquidity is not on that chart. It's not present in that name. And without that necessary liquidity to move price, it's going to stay in the same range for could be forever until external liquidity comes into the marketplace. But beyond this, price is coming down into a discount below 50%. Imbalance in price. How do we find these imbalances in price? Well, if you just look to your left and you see that we have specific signatures, okay? And what's your signature? Notice how this high of the candle here, right? Notice how there's no wick that meets this area on the chart right here, okay? Do you see how there's no wicks on either side of that candle? That is indicating that price is imbalanced to the upside, a bullish imbalance, due to the fact that price was uncontested inside this range the last time price was in this vicinity, right? If it was, then you'd see wicks here and you'd see a wick up here, right? That's the only thing that would make sense. Now watch this. When price gets into our discount bullish imbalance, our expectation is that price gets into said discount bullish imbalance and runs up and through your highs. Now, that would be a Mando model completion, okay? And look when this starts from. This is our COVID low up to our 2021 high. Here's your bear market into a discount bullish imbalance for your next run for highs. It's beautiful, isn't it? Okay. Now here's where the fun begins, because I'm going to pull up my first bit of data here to amplify this. So let's go. Where is that exact tweet? Let me just get a keyword here so I can pull it up and I'll share it with you guys so you can all see. Where is she? Here we go. Okay. At Mando Trading, all I do is laugh. Okay. All right, let me pull this tweet up and I'm going to reshare one sec. Here we go. Okay, and here it is. Beautiful. Okay. So ready, here's the tweet. All I do is laugh when I hear this time will be different. The market historically goes up. Anyone with a chart can backtest this information. I think it's time I share this with you all. The market is the Mando model. Here's your proof. Okay, so I showed you the first example being our 2021 bear market, right? That was just a discount retracement. Now, how about this? The 2018 bear market, okay? We have our low, took out this high with what price run? This low to that high, okay? Here's your bear market of 2018, your discount retracement into a bullish imbalance for your run through highs. Mando model complete. Okay, hold on. There's more. How about your COVID crash? Wow. Crazy. Ready? Low to your high. Here's your discount retracement. Here's your bullish imbalance. There's your run for highs. Mando model complete. Okay. Now, how about your 2022 bear market? We looked at this one, but here's your low to your high. Here's your discount retracement. There's your run for highs. Mando model complete. Here's your 2023 bank failure. You guys remember that? Low to your high. Here's your discount retracement into a bullish imbalance. There's your run for highs, right? So all of this previous price data, it doesn't reflect future price action, right? No, never. Okay, let's continue. Here's your 2023 summer bear market. You guys remember this one? I sure do. From your low to your high, here's your discount retracement into a bullish imbalance. There's your run for highs. Mando model complete. Let's see. This is where I'm just circling the wagons with our this time will be different. Sure. Now, how about this? This one's important right here, okay? Because, you know, it's easy to say it after the fact, of course, right? It's always easy. And that's when you see 99% of these Twitter geniuses. Oh, look, yeah, I said that this was going to go up. Where are the receipts? Where are they? How about this? Mando Trading, I like this low, okay? Because this is really where it gets fun, okay? So remember, we just talked about that 2023 summer bear market, didn't we? I remember we did. Now, okay, where are we? Why are there all Japanese writing here? Here it is. Okay. Now check the date on this. October 26, 2023. Okay. I like this low a lot. Golden pocket bullish imbalance, discount bullish imbalance, specifically 50% of it, test on the daily and bounce after taking out the swing low from 525. I like 14,979. And the rest is history. Where are we now? We're $7,000 up. Don't worry. I remember all of you telling me that it wasn't over. You know who you are. I know you're listening. I was told, no, we're nowhere near the bottom, Mando. There's no way. Sure. Okay. So that would just be one example of NASDAQ on how I used past price data to help me to reflect and make decisions for the future of price movements. We know where price wants to go based on the Mando model, because the Mando model is the market. Now you might say right now, oh, there's no way. I don't know about this. Now, how about this? I'm going to type into Twitter and I'm going to type in Mando model complete. And I knew I did this a lot in the beginning of the year. And, again, we'll just go back and we'll circle the wagons a little bit. So ready? Here we go. Let's share this up again. Here we go. How far back you guys want to go? Where are we? Oh, we're only in May. Okay, let's keep going. Let's keep going. February. Okay. Okay, good. All right. February. Come on. Here we go. Oh, no, we're still in February. Sorry. We're just going to quickly scan through these real quick, just so I can show you guys how past data does reflect future movements in price. Okay. Now, this is December, but it doesn't matter what year it is, it still plays. Mando model complete, 27 to 32, 5. Okay. Let's see, where are we? Beautiful. Okay. This is still last year. Dang it. Netflix. Do you see similarities of what we saw just a few minutes ago on NASDAQ? From your low to your high, a discount retracement into a bullish imbalance for a run through highs. Mando model complete. Let's keep going. SMCI, okay, blah, blah, blah. And this is not to say that it didn't. Time to complete the Mando model at 357, which we did. So we'll get to that, but these are just like results from the year. Where are we? Here we go. There it is. SMCI weekly, Mando model complete, 280 to 357. From your low to your high, your discount retracement into a bullish imbalance for a run through highs. That is a completion of the Mando model. Okay. Weekly on DXY, still working. Okay. And look where we currently sit. Okay. 99.57. Those are still those equal lows intact. Here's just a random example on a 5-minute time frame. From your low to your high, here's your discount retracement into a bullish imbalance, and there is your run for highs. The Mando model has been completed. 1-minute time frame, from your low to your high, your discount retracement into not only a bullish imbalance, but also a bullish breaker for a run through highs. Any time frame, any ticker, does not matter. It is how the market works. When we retrace a few points, are you going to fall into the trap again? I hope you didn't. Mando model complete. Low to your high, discount retracement into a bullish imbalance for a run on highs. Let's keep this going, because I'm going to directly send this to the person that I am discussing this with. Okay. These are pre-setups. Okay. This is another completion, Mando model completion. That was a trade from February. We'll keep this going. Here's just a random long or short question that I had back in Coinbase on the weekly time frame. From your low up to your high, you got your discount retracement into a bullish imbalance. You got your run for highs. There's another complete. Here's Robinhood. From your low to your high, here's your discount retracement into a bullish imbalance. There's your run for highs. Tell me how anybody else on X, on any of these streaming platforms, they have nothing that's even moderately close to this. I mean, come on. LMT, we'll get back to this one. This is just the setup of it. Low to your high, discount retracement. Look when this was tweeted, February, okay, at 4:31. We'll get back to that. Ready? Oh, please tell me you see it. Mara at $8 right here, $7. There's your run to $31. We're just gonna keep scrolling. I mean, I don't want to keep pausing this, but here, keep it going. Okay, I got this 4 weeks before the move. Again, there's the live stream. Can I go back in time and make live streams and post them 4 weeks behind? I don't travel time. Okay. 2 months in advance. TTD loading. Would love 77. Mando model completes at 94. Low to your high. Discount retracement into a bullish imbalance. Run for highs. That's a what 77 to 94 ish, right? What is that? $17 in 2 months. Not bad. Okay. Bitcoin, Mando model complete, low to your high, discount retracement, run for highs. So without past price data, you actually can't figure out where price is going next. Oh my God. How can someone be so wrong? Low, high, discount retracement, bullish imbalance, run for highs, Mando model complete, end phase. Nvidia. Oh, wait, this works bearish too? Oh, yeah, it does. High to your low, discount retracement, bearish imbalance, flush through lows, Mando model complete. It's unfortunately, I hate to say it, but guys, this is how the market works. I don't know how else to say this, right? I'm sorry. I just can't. I don't know what else to tell you. We have Chewy. It works on Chewy. People. Low to your high. Discount retracement into a bullish imbalance. Run for highs. You're telling me that this candle right here had nothing to do with that move. Nothing. Come on. Come on. How many more examples you want to see? I mean, I'm just I'm at a loss of words. 30-second time frame. Low, high, discount retracement, bullish imbalance, run for highs. People, guys. You still following baked in, priced in? Low, high, discount retracement into a bullish imbalance. Run for highs. Complete. 30-second time frame. Oh, here it is. Lockheed Martin. I told you we'd come back to you. I told you. Low, high, lower low, break up and through. Mando model complete. Keep it going. Let's keep rolling. UNH, 3 months in advance. A Galaxy trading special. Shout out to KD. Low, high, discount retracement into a bullish imbalance. Turtle soup. See you later. Mando model complete. We're in August now. Let's go. Let's keep going. Okay. NVIDIA. Oh, this might be my. No. Here's my first NVIDIA tweet. Whoops. August 14th. Okay. Hold on. August 14th. Mando model completes at 140.76. Do me a favor and look at last week's high on NVIDIA. Oh, 140.76. Yep. Okay. Yep. It's just how the market works, guys. It's just how it works. I don't know what else to say. Dell. Okay. September 14th. Mano model completes at 120.40. Where's Dell? Whoops. Where is it? 120.40. Ding dong. We're actually about 130 right now, but that's besides the point. How about this? QPang. How about this? Low, high, discount retracement into a bullish imbalance, run for highs. Look, I know the people who are in the group and they know how to do this already. They're probably like, yo, this guy is annoying me to the death of things. But you got to be able to see this. And I don't care. This is my last stream. I'm doing it the way I want to do it. Low, high, discount retracement, bullish imbalance, run for highs. Tell me where someone can show you a setup that works this often on any time frame, any ticker. Can't. Sorry. But remember, we don't use past data, right? Because analyzing past data, quote unquote, does not reflect future price movements. Nope, not at all. Nope, it's just a guessing game. It's what JP Morgan tells us about things being priced in because of an election. Yep, like it mattered at all this past election cycle. How about SoFi? Low, high, discount retracement into a bullish imbalance. See you later. Keep going. Okay, there's Meta. There's another Netflix. Here's Carvana. Remember the people who had that short report out on Carvana last year? How's that going for them? They don't know how to reprice. Here's your next V. Low, high, discount retracement, bullish imbalance. See you later. And I'm auto complete. I'll keep going. I will. You want a dividend name? Sure. Low, high, discount retracement, bullish imbalance, run for highs. Next. I mean, we keep going. Upstart. Remember that at $25? I do. That was when I was told, oh, you're going to like this one. Okay. Upstart, August 13th. Upstart to 50 with our buddy Joe, Nonsense TA. That was his contribution to this stream. Is it still nonsense, Joe? You watching this? I don't know. I don't know. How about this? August 14th. 49.62. That was when we were at $36. Average price $26.51. So you're telling me that I can use past price data to help me in my decision-making process in the future? You tell me. So that's all I have on that. Now, yeah. Huh. Yeah, they're pricing me in, right? Works on everything. I mean, look, these are not my concepts. So don't think that I'm just trying to boast my own self. That's not what this is about at all. I learned all the stuff that I use right now from ICT completely. I just did basically what he teaches everybody. Take the things that make sense to you and put them into your own model that makes sense to you, that is something that you can back test and prove. And when you do, you reap the benefits of it. And I hope from what I just showed you over the last 36 minutes, that is enough to help answer the question about analyzing past data not reflecting future price movements. So it doesn't matter. That was the comment, guys. And people believe this. Do you see why I get worked up? Do you see why I'm not doing these anymore? Do you see why I'm taking it easy for the next 2 months? I'm not dealing with this anymore. I don't know how much more I have to show. But you can continue to, go and support Joe Schmo posting random line charts with circles and arrows and moving averages and all of this stuff that it's not even close in terms of efficacy. And I'm just burnt on it, to be honest with you. I'm just done. Why am I wasting my time to go share my thoughts or answer people's questions? For what? For what? I'm just, I don't need to do it. I'm like, I'm sitting here thinking to myself, and I'm like, do I actually respond to these people? They really believe this. They really truly believe this. I don't know. I'm just like, do I what do I do from this point? So I came to the conclusion that at this point, for anybody who's trying to get better at this, they're probably doing the work on their own, which is great. And for the people who come here and stuff, look, it's great to have you, and I'm happy you're here and everything like that. But it's come to a point where I got a really nice group of people, all great people, all putting in work, grinding. I'm good on here. I don't need to do that no more. I'm taking a break. I'm burnt. It's the same old stuff every single time. I got, it's at some point there has to be some sort of progression, and there just really hasn't been one. So I'm chilling. I'm gonna take it easy for a little bit. I'm going to keep doing what I got to do. But from this point, if you're, just somebody who's kind of on the fence about, do I go at this? Do I actually take the time to learn how to do it? Do I do this? Blah, 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 whatever. I hope this could aid in terms of giving a little bit of a wake up call and just to show, the level of success that you can achieve when you actually put in this time and effort. But just like anything else, if you're just going to kind of go through the motions, say you're putting in the work, lying to yourself, lying to everybody else, and think that it's going to work out for you. I mean, I really don't know what to tell you. But anyways, that's my rant. I hope what I showed you tonight, the hundreds of examples of the Mando model being the market and how price actually delivers, was helpful to you. And I hope that is something that you can take away from this and put into your own work to ultimately come up with your own model, how you are going to go about analyzing future price data, how you are going to become a better trader. You know, because, it's all good and all great. And I say this all the time about alerts and all of this stuff. You could be with the best alert giver, but all it takes is one time that that person's wrong, one time that you mishandled the trade, right? And ultimately, it's going to be your fault. I mean, that's my take on it, at least. But I'm also just I don't understand why do people who say that they're into this, who are trying to better themselves, better their lives, better their families' lives, why are you relying on somebody else? Just go do it. Go learn how to do it. It's right in front of your face, but you won't. There's too many people that are lazy and they want everything given to them. And I'm kind of convinced. I'm not gonna lie. I'm kind of convinced that people really love just being like failures and have something to complain about. There must be something to it, because still there's so many people. It's the same cycle over and over and over again. You can't get out of your own head, or you just don't want to believe that you can be good at something. Maybe that's what it is. But I don't know. I feel like you know, we're a lot of people are becoming at a crossroads, because right now, to me, honestly, I don't want to say, well, maybe over the last month-ish, it's been a little bit more difficult, but I'm in the camp that this is only going to get harder, because the last couple of months to me were not very difficult in terms of reading price and using past data to uh, influence moves going forward. That's my take on it. Yeah, Joey Werner is he's gone, like a bunch of the other Twitter gurus that I unfollowed yesterday. Man, you go through your following list, if you've been here long enough, and you just see these people dropping like flies. They're all gone. Why? Because they don't have anything that actually works. They don't know what they're doing. They're putting out garbage for you to consume and for you to believe in and brainwash yourself with, so that you go down the hole with them. So, but all right, let's do weekly prep here. So, uh, before that, let's pop on over here and we'll pull this up really quickly. So, we're going to talk about Edgeful because, like I said, this is my last stream for a little bit. So I want to kind of dispel a lot of the myths that are out there, because there's a lot of them. And one being the idea of gaps. Okay. So, right. And everything that I do is backed by data. And that's why I look to Edgeful for this, because they actually have concrete data. Okay. They track this stuff. Okay. So what I'm talking about really here is, if you were to look at SPY from your initial 1 hour move, right? This is something that can be measured. Okay. And over the last 126 days or 6 months, you have 68% of the time only getting a single break of that initial hours range. Okay. So how is that useful? 69%, right? Well, this also comes into, do we gap higher? How does that, how does price react to that gap higher, right? If it's a single break, then are you really expecting a break from that initial move, and you're going to fight 69% of the time that price goes in one direction and stays in one direction over that first hour throughout the rest of the day? So that's why, I mean, there's a lot of tools on here that are extremely helpful and actually give you data to back your claims, right? You could talk about the gap fill. How about a gap fill, right? 66% of the time that gap is filled, right? Or a gap down is filled 72% of the time. What is that telling you? Do you need to chase that initial move with these percentages, right? So when you put a number to these concepts that you have, right? Because everybody always says the gap always fills, it always fills. Does it always fill, right? That's first. Does it always fill? And if you have a specific number, and even without the specific number, if you're under the impression, or you believe that the gap is going to fill, right? Why are you chasing? Right? When newer people come into the group, that's the first thing they say. Oh yeah, I have a problem. I chase a lot, and I get burned by it, and I just can't seem to stop. Well, here's data to back it up. Sometimes seeing those numbers are really helpful, and you could even use this. You can really just create your own model based off some of these. I mean, But anyways, that is edgeful anyways. So with that, let's get into it. We're going to go through some individual names, some of my closing thoughts, and we'll be on our way. So back to NASDAQ. Okay. So like we talked about before, after the completion of our most recent Mando model, you now have a new range. Haha. Or do we? Has there been an imbalance to the downside to indicate that 50% of that range is coming? Not quite. So until that point, until we see that first imbalance form on this monthly time frame, and this is something that if you go back to the first stream of the year in January, when we had that nasty candle, where was it? With that first weekly candle of January. Here, I'll pull it up. There it is. Remember this candle? Yeah. Go back to the first stream of January. You're going to hear some good insights on that, I bet you. But you won't, because you don't really care that much. I know, I get it. But that is until I see that first imbalance form, I am not looking for a discount retracement. Once I see that first imbalance form, I'm looking for a discount retracement. Odd NAM model complete. Don't worry, I got more than one, guys. I got more than one trick up the sleeve. And guess what? That's using past price data to help you make decisions for the future. Remember, I was told by this guy on Twitter that that doesn't work. You tell me. Every single time that we've had an imbalance, price has seen discount. So until then, I got nothing. But we are in a very, very important spot on NASDAQ. Our showtime imbalance here, right? We still have yet to prove that we are going to get up and out of that showtime imbalance. Okay. And if you're new here, what does showtime mean? Showtime means after price's reaction to this specific, 250 point range, we're going to have a lot more answers. If price rejects from this imbalance, I'm fully anticipating a much deeper retracement. Okay. Why? ES didn't get its discount retracement yet. Okay. Did not. While NASDAQ did. Okay. We have divergence between two of the, focal indices throughout. Now, with that, this is a huge spot. If you make a move up and through here, 21216, I believe it's coming. Now, if we can't make our way up and through, close above that imbalance, we might be in some trouble. So that's why I really believe that we're in a very, very important spot here on NASDAQ from a weekly perspective. This really goes for all of the indices. Now, with that, you can look at specific names to, kind of get you a gauge and have you lean one way maybe. But that doesn't necessarily mean that you need to front run this, right? Just because we're in this showtime imbalance doesn't necessarily mean price has to go down. And that's why it's labeled the way that it's labeled. It is a bearish imbalance, but our structure is bullish, right? So for me to short this, that's very difficult for me to pull the trigger on, just knowing what our overarching trend is. Okay. But again, until we see that monthly imbalance to the downside, odds are we're probably going to get another opportunity at it here. Okay. Right back into that imbalance. But until then, I have no expectations, or I'm not getting rid of positions because I think the market's going down or anything until it actually proves it to me. And the idea is to be in it down here so that when you are up here and you get this feedback, you can make your decisions and also be well in the green on that trade. But that is NASDAQ. Now here's where things get a little funky. Okay. Oh, watch what happens here. Refer back to 10-9 stream. I bet you not one person that's listening right now is going to go back to the 10-9 stream after this. I bet you. But that's when I typed this out. That's when I gave my idea on dollar. High, low, discount retracement into a bearish imbalance, looking for a move down through lows, the relative equal lows down there, resting at 9957, 9957. And that would be a bearish Mando model completion, not only on this smaller time frame run, but also on your larger time frame run. Okay. This is me using past data to influence and help and determine where price is going next. So that would be the dollar. Now on to Bitcoin, because this is something that I've been kind of keyed in on from a little while. And again, reference stream 10.9. 10.9 was a wild day, I guess, because I have two things labeled 10.9. But now here's your next. From your low to your high, here's your discount retracement into a bullish imbalance. What is the draw on liquidity for me personally? Where do I think price is likely to go? 73,794 would complete the Mando model here on a weekly time frame on Bitcoin. Okay. Up here, we have 1, 2, 3, 4 sets of relative equal highs that I'm looking for price to get up and slice them. No problem. That's what I'm looking for. Okay. Now, where we currently sit, and with a day left here on this weekly ticker, I think it would be very beneficial for Bitcoin to get a close above this bearish imbalance yet again. Okay. We hung on to it. We need to disconnect from this level, and beyond that, we're gone. And it'll happen pretty quickly. I'm under the impression. So that would be Bitcoin. Let's move down to Tesla. Okay. So we have Tesla, and I know we went over this one a little bit, earlier and a couple of weeks ago, but we took out this high with what price run? Low to your high. Price gets into a discount. There's 50%, 168.84 right here. Discount, bullish imbalance, gap higher, bullish volume imbalance. And there she goes. Mando model complete. Now where we sit currently, from your low up to your high, here's your discount retracement into a bullish imbalance. There is oh snap, we didn't run through highs yet. Bullish volume imbalance here. Okay. The only negative on Tesla right now is that we created a bearish weekly imbalance, which could indicate price slowly getting up and through this level. That's all. But that is Tesla. I'm anticipating higher to close out the year and ultimately moving into the beginning of next year as well. Okay. AMD. There must be something to that showtime, huh? Low, high, discount retracement, bullish imbalance, bullish breaker. So far, so good. That's from a larger time frame perspective. Now, you might say, ain't no way. Where I would say, are you sure? Check this. Okay. Whoa. Low to your high, discount retracement, bullish imbalance, run for highs. Mando model complete. That's back in 2023. Here it is again. Low to your high. Here's your discount retracement into a bullish imbalance. There's my tweet, September of 2023, 10-point risk, potential 40-point win, run for highs. Mando model complete. And that's where we currently are sitting inside right now. Whoops. Go back over to the weekly to show you guys what we got. From your low to your high, here's your discount retracement into a bullish imbalance and bullish breaker. And so far, so good. Just ran into showtime. That's all. Slows price down. Speed bump in the process. That would be AMD. Now, how about Mara? Because I know, we talked about a lot of the winners. And the best part about this one is, this one is taking forever. But we're still green on it. There's your monthly bullish imbalance. There's your bullish breaker. Here it is for reference. There it is. Oh, right here. I'm sorry. Right here. Low, high, lower low, break up and through. We'd anticipate the high of that sequence to act as a support level moving forward. Ding dong. So far, so good. Just taking forever. Low, high, lower low, break up and through. And look where we closed. Huh. Pretty random, huh? Pretty random. All right, we'll do a couple more. Riot, very similarly. From your low up to your high. Here's your discount retracement. Here's your weekly bullish imbalance. So far, so good. You actually got the breaker formation. Low, high, lower, low, break up and through. So far, so good. That would be a riot. Now, how about this one? And you might say, there's no way. You said after that big earnings knife in February of 2024, that price was going to 380.84. You sure? We can pull it up right now, and I'm going to. Low, high, discount retracement. Oh, 380.84. Man, model completes. But guess what? I'm pulling it up. We're going to talk about it. Because I'm not actually sure if I posted this one on Twitter or I posted this one in the Discord. Let's see. Oh, yeah, I did. I posted on Twitter. Here, hold up. We're going to go to share. Don't worry. Don't worry. Here we go. Okay. Don't you worry. Here it is. Whoops. Monthly Mando model completes at blank 380.84. Shout out SJ. 380.84 Maria. Norpez 380.84. 380 Scully. Trading days 380. Turk 380. 380. 380. People are learning. They're only getting better as a result. So, with all of that, I'm done. I'm going to begin the hiatus where X will be used as my victory lap racetrack, and that's about it. So, with all of that being said, I hope everyone has a great rest of the year. It's time to buckle down and get ready to go because it's only going to get harder from here. Haha. All right. See you guys later.